Hey everyone, Jeff Dorman, CIO of Arca, back again for another edition of That's Our Two Satoshis Live, where we talk about everything happening in the crypto markets, which is a lot right now. We're coming live on Tuesday, November 26th. Obviously, a holiday shortened week. People are going to be all over talking about crypto again. I was actually couldn't even believe it's only been a couple weeks since the election. It feels like 3 years. That's how much happened in the crypto market space over this short time period. So we'll get into it. As always, if you're more of a reader, you can go to our blog, ar.ca/blog, and read what we put out this week. And as always, as a disclaimer, this is not investment advice. We simply like to talk about what's happening in crypto. So, if you're looking at prices, obviously it's been a good month now, right? We're talking anywhere from 30 to 100% plus returns across most digital assets. Not all of them. There's a few laggards here and there. If you're not familiar with certain screeners, probably a good time to look at them because there's a lot of rotation happening within the digital asset market. Shout out to Masari, one of the screeners that we use that we really like. But anyway, pretty strong month. Week over week, a little more mixed. Starting to see a little bit of a rotation out of Bitcoin and Ethereum and Solana and maybe into some other areas. Certainly some of the tokens and sectors that have lagged a little bit starting to take off, seeing gaming get a little bit of a bid, seeing some layer 2 and data availability tokens get a bid. Even some layer 1s like Avalanche that have been pretty sluggish starting to get a bid. But, look, it's crazy season right now. And I always joke with my team that bull markets are actually way harder than bear markets to trade, which I know sounds weird. Obviously, bear markets are a lot harder on your dollar. But bear markets are easier, right? You have way more time to look at things. You can process moves objectively. You can ration your cash. You can spend weeks, months investigating opportunities, deploy money slowly into ideas that take somewhere between 6 and 30 months to play out. Bull markets are a lot harder, right? You're making decisions in hours. You have less information, higher opportunity costs. You're distracted by 1,000 things going on. There's people tripping over themselves trying to buy tokens you've never even heard of with leverage. Obviously, you try to do your best to zone some of that out. But I think, what we look at more is trying to identify the why, right? Why are things happen, right? Even if you don't necessarily see it before it happens and you only look at it in retrospect, usually you can at least make sense over what's happening, right? So let's look back at what's been happening for the last 3 months, right? Really, the lows of the market were kind of September 6th, and then obviously accelerated around the election in early November. But the lows of the market were the recent lows were September 6th. Since then, it's been pretty obvious what's happening, right? Bitcoin has had a bid. Solana and the Solana ecosystem has had a bid. Base has had a bid in some ecosystem tokens around Base. You've seen some blue chip meme coins. You've seen crypto equities, MicroStrategy, Coinbase, a few AI tokens here and there, and then maybe a few newcomers. Things like Sui and Athena and Grass and few. But it's been logical, right? I mean, you can mostly explain this, right? Bitcoin, basically a credit default swap on continued deterioration of trust in your banks and your governments, including runaway debt and inflation. Look, gold's up just as much, right? Not necessarily in absolute terms, but in terms of absolute dollar terms, in terms of market cap growth, gold and Bitcoin, it's a play on inflation. It's a play on lack of trust of governments, right? Solana makes sense. Solana's basically iPhone, 10 times faster than BlackBerry. Way better UX, more apps, social consensus, etc. Right? Meme coins, whatever. It's a gambling culture, kind of the equivalent of trading daily options on Robinhood. Maybe it's a middle finger to Wall Street and society, but again, you could rationalize it. So you got Bitcoin, you've got Solana and Base, which are the hottest kind of layer 1, 2s out there right now. You've got meme coins, you've got this growth in AI. Starting with the rise of GOAT token, and now hundreds of AI agents being deployed every day. Similarly, you can make sense out of the laggards, right? Ethereum, slow, clunky, kind of the BlackBerry. I like to think of somebody actually said this to me recently, and it kind of stuck that maybe BlackBerry is the wrong analogy for Ethereum. Maybe it's more Microsoft, which is in the early days of the 2000s and the internet boom, Microsoft really lagged a lot of the hot internet startups. But ultimately, Microsoft was a better enterprise solution. It just wasn't a good consumer solution. So ultimately, when every company and business started to get using the internet, Microsoft took off, and Microsoft is now a $3 trillion market cap, one of the top companies in the world again. So, and ETH is probably like that, but at least in the short term, ETH does not have a good consumer traction, and that's most of what crypto is right now. As a result, all the endless ETH layer 2 tokens have also suffered. The Ethereum DeFi tokens have suffered. We mentioned gaming has been a laggard because there just hasn't really been any hot games. Obviously, NFTs have been a laggard as well. Even DPIN, right? Just because structurally DPIN is a tough investment because it just takes so much supply side pressure to build the network that the token itself can't really do well until many years later. So again, most of the last 3 months has made a lot of sense, again, even in retrospect. The problem right now is that there's no rhyme or reason to why things are happening, right? Why is Ripple up 180% and Cardano up 200% and Stellar up 500% and Sandbox? I mean, Sandbox hasn't done anything since 2021. It's up 230% or so. You got Coinbase, once again, the number one finance app. Trading has become gambling again. I mean, there's just so many, zombie or kind of, dead tokens that have resurrected. It just makes it harder, right? To figure out why things are happening right now. So again, we try to take a step back and to try to make sense out of, well, what is really happening, right? So number one, monumental sentiment shift with regard to not just the election itself, but even pre-election, just on what was happening with this push towards government starting to accept crypto and blockchain. Obviously, Trump being very pro-crypto, but we're also talking about changes at the SEC, at the Treasury, at Congress. Just, you cannot understate how much of a noose around the neck of the industry the government and political and regulatory regime has been. Independent of what prices are doing, you have to take a step back and recognize that this is the most bullish setup we've seen from that standpoint, as well as just things like this, the Santa Claus rally, January effect, Republicans back in the government being good for all risk assets. So, no matter what you're seeing at the individual token level, you definitely have this backdrop, which is positive. Then you have to look at where is blockchain really impacting the world, right? And I think this is where it gets hard as well. There's been so many flash in the pans, things like play to earn gaming, which was, came and went. Things like, social apps like Farcaster and, came and went. You have and Friendtech on the social side, right? You have even Polymarket. You look at a chart of Polymarket. I mean, its activity is down 90% post the election. So it's been hard to find where are the sustainable trends going in blockchain and how do you actually focus on those? Well, again, you take a higher kind of macro view of blockchain and where the activity has been. It's kind of easy, right? We started with Bitcoin. Bitcoin is a currency. Bitcoin is a social and inflation and government protection type vehicle. That's been pretty persistent now for well over 10 years. Then you had this growth of smart contract platforms, which enabled things like DeFi and centralized exchange tokens. Those are still real. Those are still kicking. Then you had the growth of gaming and NFTs, some more real than others, but as a sector, I think people still believe gaming is going to be one of the long-term winners in terms of blockchain adoption. Obviously, you have stable coins, now 200 billion of stable coins, probably heading to $1 trillion in the next couple of years. That's sustainable. More recently, you have the rise of AI and in this intersection between AI and crypto. Still too early, but NVIDIA is the biggest company in the world for a reason. I mean, there's real demand and real interest in what is going on in AI. So anyway, when you separate it that way, it's just easier to dismiss some of the moves that are happening in crypto and focus things on areas where there's going to be more probability of success. But it doesn't make it easier to invest in a bull market like this. Like I said, bull markets are hard. In fact, our friends at Bitwise put out a nice blog recently, making the case for passive investing through indexes, right? Broad-based indexes. And I'll read you a quote. They said, as an investor, you're faced with two options. You can try to pick and choose the winners, researching, dozens of different blockchains and thousands of different tokens and their tokenomics and fundamental drivers, or you can bet the field, buy a diversified index that holds the leading assets on a market cap weighted basis. And that sounds great in theory, right? We're all used to index investing in equities. The problem is, if you actually look at the makeup of these indexes, they're horrible. It's either 80% Bitcoin and ETH, which not really an index, it's just two tokens, or they are market cap weighted and they have your Ripples and your Cardanos and your Stellars, all these legacy tokens that have big retail backing, but nobody with a fundamental view or any sort of an actual investment thesis would look at these right now. So it does provide diversification, but it doesn't necessarily provide you with the growth of what's actually happening in the blockchain space. Obviously, for those that are accredited investors or institutional investors, you can look at funds like ARCAs, and that gives you, more diversified exposure as well. But I think it's no secret a lot of active managers are benchmarked versus Bitcoin, and Bitcoin has been such a monster that maybe that's not the best option either. So it's it's difficult, right? But if you think about it the other way, the third option is just ignore the space completely and don't invest at all. And I think everybody would admit that that's been the wrong strategy. In fact, the incoming CEO of Charles Schwab recently went on record saying that they're going to start getting involved in crypto. And the exact quote was, "I have not bought crypto and now I feel silly," which he should. I mean, in general, crypto has been the best performing asset class for a decade now. So long story short, it's distracting in a bull market, right? There's too much going on. There's too many tokens. There's too many games of hot potato. But it doesn't have to be as an investor. As an investor, you can focus on the bigger picture. One, we've never had more money and more interest pouring into the space than we do right now post the election. Two, there's a couple of real viable sectors and areas where blockchain has been legitimized and will continue to grow, especially as you start to break down this divide between crypto rails and traditional bank and brokerage rails. And three, again, you can ignore the majority of what's happening out there if you don't have an edge or you don't have a real pulse on what's happening, right? Anybody in the industry who works full time, like I do, and like my team at Arca does, we're getting inundated by calls and texts and emails talking about, should I buy this coin? Should I buy that coin? It's like, look, the reality is half the stuff people are asking about, I don't even know about it. We have a full team working 24/7 on this stuff. So you're not expected to know everything about crypto. You don't have to know everything about crypto, but you can't ignore it because it is real. And again, there's never been a more positive backdrop in the space right now. So, we'll take one of those sectors and look at it. I mean, take DeFi, for example. Decentralized exchanges, the growth is real. The combined on-chain DEX volume of the 23 chains just reached an all-time high of 17 billion last week. 4 of the top 10 outright single highest days of DEX volume ever came in the period post the election. It's undeniable that there's real volume and real traction happening on these DEXs. And that, again, is with the fact that most of the actual assets you can buy in these decentralized exchanges aren't even really good assets. I mean, imagine when you can start buying your Tesla stock or your Apple stock or equity in Miami real estate on chain. I mean, it's going to continue to explode. On-chain lending, same thing. Aave, for example, just crossed 30 billion in deposits last week. If you just looked at it objectively as a bank, it would be a top 65 bank in the US right now, just by deposits alone. And again, what can you do on Aave? You can't even do that much right now, right? You deposit an asset and you borrow stables or something else. I mean, it's not even, it hasn't even fully touched all the different ways that you can use borrow and lending markets across real assets. So it still feels early to me in terms of the growth of blockchain. It still feels really exciting to me. But again, it's very difficult to trade. I mean, that's just the reality. Bull markets are very challenging. And it is not an easy setup when you're seeing things move 20, 30, 50% in a week, and you start to get FOMO and you start to chase things. So, where we're focused again on the sectors that we know are tried and true and the better assets within those. We're focusing on some new areas that we think have sustainable growth, like this intersection of AI and crypto. Shout out to the Arca team on our blog. If you go back a couple of weeks, we wrote a nice piece on GOAT. In the next week or two, we'll probably write another one on some of these AI launching platforms and some of these interesting AI agents that are popping up. Things like Virtuals on Base and VVIFU on Solana, as well as like the AI16Z agent that's popped out. So there's a lot going on, and we are certainly trying to cut through the noise and look for signal. Easier said than done. That being said, again, pretty strong month here in November, even with some of the weakness that we're seeing right now. Again, it feels like a rotation out of some of the majors into some of the more hotter, interesting areas. We'll see what happens over the holidays and into December. But in my opinion, like I said, we have institutions and investors and people calling us that haven't been looking at the space in 3 years. It is undeniable a real shift and a real change in sentiment and outlook for this industry. And you got to keep that backdrop even as you're looking at, micro caps that are moving in 50% ranges. So that's it for this week. We'll be back again next week. Happy Thanksgiving to everyone who celebrates. And we'll be back in next week. For those who want to follow us, you know where to get us on our website, ar.ca. And obviously you can hit me on Twitter at jdorman81. Thanks, everybody.